good day, good morning, good afternoon to you all, wherever you are, and welcome to this roundtable with the Central Bank of Israel, the Bank of Israel, and in particular with their Director of Payment Systems, Oded Salomy, who comes from a fascinating background, 8 years General Manager of Visa in Israel, founder of Visa's fintech hub and innovation center in Israel, degrees from Harvard and Pennsylvania Law School, so much traveled, very wise, and expert in payments. I'm going to talk to us particularly about the growth of fintech in Israel and the development of digital currency thinking in Israel, both at private and public sector levels. So look forward to that. My name's Phil Middleton. I am chairman of the OMFIF Digital Monetary Institute, leading our research and roundtables and activities with our members. So welcome to everybody. The objective today really is for me to say very, very little, for us to listen to Oded, and then really to pose questions and get into a bit of a debate. Just before I hand over, some minor ground rules. Oded's presentation and slide deck will be recorded and on the record, and will be available subsequently on the OMFIF and Bank of Israel websites if you wish to download.
Everybody, nice to meet you. First, wonderful thank you to OMFIF, as well as the new institute you've set up, DMI, Digital Monetary Institute. I think it is a tribute to the importance of the payments industry to see what a large sign-up list we had, over 100 people, and I know a much smaller group was admitted to this roundtable. Just thought, since we're not in the same room, to kind of quickly read through the central banks that have signed up and have been admitted to participate. So banks and regulators from Portugal, Thailand, Malawi, Poland, Barbados, Federal Reserve of New York, Russia, Canada, Nigeria, Mauritius, Bermuda Monetary Authority, Hungary, Chile, Brazil, Lithuania, Korea, Serbia, the EU, and of course the Central Bank of Israel, and some well-known companies such as IBM, Amazon, MasterCard, PayPal, Accenture, and many others are with us today. I think it's just quite an exciting space that we're all in, both as regulators and as industry participants. Thought we'd share some thoughts about the payments industry with you today. Phil said we'd talk about fintech. It's all fintech related, but we do come at this from a central bank perspective. So as Phil mentioned, my name is Oded Salomy. I'm Director of Payment Systems and Settlement at the Bank of Israel. We'll talk about some of the reforms that we're leading, as well as digital currencies, as Phil mentioned. And it would be great if I could click down. Hold on. There we go. So just to give you some context about the market where I am situated, Israel is 9.4 million people. It's actually quite a small country. We get much more than our fair share in the media. We have 9.4 million people, but 9.5 million cards. So that's much more than one payment card per adult. Last year, we crossed the 50% mark in terms of penetration to private consumer expenditure. Number of retail banks is 7. Then we have a number of multinationals doing things like corporate banking and commercial banking. The size of the land, which is interesting, 22,000 square kilometers, is about the size of the state of New Jersey, for those who are interested. So things that we do as a central bank, our role in the payments industry, the group that I lead, the payments department, include establishing policy, kind of long-term policy for the payments landscape in the country, overseeing payment systems, operating payment systems, which are two very different things. We'll get into that in a minute. The payment systems that we operate are RTGS and the National Check Clearinghouse, as well as influencing and partnering with other government agencies and the operations part of the central bank to convert ourselves into a catalyst for adopting digital payments, because as government and as a central bank, we are able to influence consumer behavior deeply. So we take that role seriously as well. I want to say a few words about what a payment system is. Apologies for those of you who know this well because you are payment system regulators, but not everyone on the call is in that category. So just to make sure we're talking about the same thing, let's talk about a customer who walks into a store, a merchant, to make a purchase. If that customer purchases a pair of shoes with cash, there are no intermediaries. The two individuals or the two entities exchange value, and it's done. However, if the customer would like to use a different payment method, be it a check or a credit card or a wire transfer or a faster payment or even an RTGS payment, then it becomes a bit more complex. There are intermediaries. The customer works with her payment service provider, let's call it a bank, Bank A, and that bank manages a bank account for her, perhaps issued a credit card for her, perhaps printed a checkbook for her. And the merchant works with its payment service provider. Let's imagine the payment method is a credit card, and that merchant, that store is working with a merchant acquirer. And so that acquirer connects to the point of sale in the store every time a transaction seeks to take place. And so once that customer walked into the shoe store and tried to make a payment with the card, her connection with her bank is with the bank that issued her credit card. The store's connection is with the acquirer that processes the card transactions for the store, but they need to connect. They connect by sending each other data messages, transaction authorization requests, clearing, and then ultimately they also settle funds between them. It is that connection between the payment service providers, this yellow arrow in the middle, which actually comprises the payment system. And that is what we supervise, and in two cases, what we operate. We do not necessarily regulate the payment service provider as a standalone entity, but we do look at the entire ecosystem of that payment system and make sure that it's stable and efficient. And when we talk about efficiency, we think about competition and innovation as part of the efficiency category. And the payment service providers could be banks, could be what we call in Israel credit card companies. We have entities like that here, which act as issuers, acquirers, issuer processors, and acquirer processors all in one company. It could be a big tech, and it could be a fintech. So in the Israel market, we have 7 major payment systems, at the center of which, of course, is RTGS, which we operate, and all funds ultimately settle through RTGS. But we have a national ACH clearinghouse, which provides not only ACH wire transfers, but also the faster payments rails, a national ATM network and some sub networks, a national check clearinghouse, which we also operate, a national card switch. The window is hiding this. Oh, sorry, the CLS system, which is a payment system for foreign exchange. And then the Tel Aviv Securities Exchange also is a payment system that settles funds through RTGS, which we operate. So I'll go quickly through the reforms that we've led or that we've been a significant part of, either as the payments department in the central bank or in partnership with another group at the central bank. In Israel, the supervision of banks, the supervisor of banks, is also based in the central bank. We do a lot of joint initiatives, and in some cases, we're also cooperating with other regulators. So some of the things that these reforms include. So one interesting note about regulatory structure, our payments group was a subgroup of another unit. The current governor came into his role. One of the first things he said was, you know what, payments are strategic for the central bank. They are strategic for the market. It's one of the spaces where we're seeing the most movement. It's a very dynamic market, and we'd like to make sure that they get the attention and are able to make the impact necessary. So took that group out of the other unit, made it a standalone department, put a manager, me, who's a member of management and able to therefore hopefully more effectively lead processes. And another interesting aspect of the regulatory structure from just a few days ago is that our government is setting up a committee to review the entire financial regulatory structure. So we have a regulator for capital markets. We have a regulator for insurance companies and credit unions and pension funds, which also regulates and licenses some of the fintechs, including the crypto space. We have a competition authority, formerly known as antitrust. All of these, each of them regulate a different space, and there is now a national initiative set up to review this structure, as has happened in other markets, to make sure it is aligned and ready for some of the disruption that's happening in the financial space. New market entrants. So there was a major reform in the government a few years ago, which required the two largest banks to spin off, to sell their fully owned credit card company subsidiaries, which act, as I mentioned earlier, as issuers, acquirers, issuer processors, and acquirer processors of payment cards. And they also provide credit to individuals and to small businesses. We also have a new credit union that came to market and just got licensed. We also have a new bank that got a banking license, the first new banking license in the country in the last 40 years, which is going to be a wholly digital bank. All of these are looking to connect directly to the payment systems, and their very existence is a direct result of regulatory reforms that were led through a multi-year process. And all that is designed to increase competition and innovation in the financial space and payments as a first step. Open banking has just now come to market. I know in the US and the UK, some other places, it's been around for longer. One of the advantages of being late to market with this is we were able to look at the experiences of other countries, realize that in some markets, one of the challenges was that different banks open up their systems using different types of APIs. We thought, okay, why don't we make sure there's one standard so that a fintech can connect to all the banks using the same protocol. The supervision of banks led a process at the end of which we adopted the Berlin standard, and we're part of the group that leads the Berlin standard now, which enables which requires all the banks to open up their systems using the same APIs, and will enable fintechs to connect to them using those same APIs. And one of the main things that happen through open banking are payment initiation, and that's something we expect to happen in the next few years. This is a very fresh development. Another multi-year process is current account switching. So historically, an Israeli, and this is true in other markets as well, an Israeli that wants to change the bank where they manage their current account might require several weeks until they can get it all done, and lots of time. And a result of this long reform and implementation that is about to come to market is that Israeli consumers will be able to change their current account bank at the click of a mouse. And that includes things like migrating their check from the account where they started to the new account where they opened. Bear with me, two more. Faster Payments is a rail that is sitting on top of the National ACH Clearinghouse, and we are working closely with them to ensure they are aligned with some of the modern technology and standards that we're seeing globally. And my favorite, since I spent many years at Visa, is this huge reform that we led in the cards space. So we didn't have EMV in Israel until a couple of years ago, and that is actually for good reason. We were still using magnetic stripes on payment cards. Why? Because the reason most markets migrated to EMV was to cope with fraud. But in Israel, we have a national switch that embeds its software in every domestic point of sale, and through that software manages fraud at lower levels than full EMV markets. So the market didn't have an incentive to migrate to EMV as it did in other countries. And yet what we saw happening after the fraud event in many markets is that, oh, look at this, EMV has become a platform for innovation. We'll add an NFC antenna, enable proximity payments, and then we'll take the chip out of the card and the NFC antenna out of the card, put it in a smartphone, and enable to tap the phone on the credit card terminal and pay and go. This has been around in many markets for years. And we thought, well, we really just can't be far behind with this. So required all the acquirers to require their merchants to migrate to EMV and NFC compliant terminals. This happened in the last year and a half. We're now at close to 70% of the point of sale terminals having migrated. And something incredible happened in about a year. 7 digital wallets came to market and have launched. and have completely changed the customer experience. That includes Apple Pay, and we expect additional global players to come to market shortly. And then there are another 2 or 3 national retailers that are looking at entering the payment space as well. This is truly revolutionizing the payment experience and offerings in our market, all in a fairly short time. So for reforms that we're working on in the future, but these are things that are active projects. We looked at the check, the paper check. Some countries have phased out the check, but we thought, well, do we want to do this? There is a feature with a paper check that isn't available with any other product, which is that it provides free credit without coverage in a current account. So let's say I rent an apartment, I provide a post-dated check as a security deposit to the landlord. Even if I don't have enough money in my bank account to cover that security deposit, the landlord accepts the check and is aware that there may not be coverage for it because it is legal tender. And around the check writing industry in the B2B space, as well as in the consumer to business C2B space, there is quite a huge amount of activity. So we thought, instead of phasing out the checks, why don't we just make them digital and provide the same feature that I just described digitally, perhaps as part of a digital wallet or payment app. So that's an active project we're working on. We're also looking at cross-border payments, how to decrease the number of days to payment and the cost of payment. This is a global call, so if any of you would like to talk to us about how to help us improve cross-border payments in Israel, please do reach out. Major project on providing equal access to payment systems when it comes to non-bank PSPs, payment service providers. In order to make that effective, we need a regulator over these players. Israel's been in political gridlock for the last couple of years, haven't been able to pass new laws that are not COVID-19 related. We finally have a new government in place that will probably be able to pass this law, and we expect it to pass in the next few weeks. We call it the PSD law because it's modeled after the European Payment Service Directive, which, among other things, gave non-bank entities licenses to operate in payments, either as payment institutions, e-money licenses, or otherwise. And so our version of the PSD law will also identify a regulator for payment service providers and enable them to operate and connect directly with the payment systems. And we have all that. We almost have that set up and ready to go when they're ready. So those are the reforms. It's really the highlights. We have lots of others, and we can do more in the Q&A if you'd like. Phil really wanted me to say a few words about digital currencies. So here we go. One of the first things that we do when we think about digital currencies is taxonomy. How do you describe it? What is it? What is that, the digital currency? So there are many ways to look at taxonomy, but 3 major categories that seem to be common across the board are CBDCs, which are central bank issued currencies. So if we issue a digital currency in Israel, we have paper notes called shekels, and we could have digital notes called shekels. And I know there are many central banks on the call. Most central banks, maybe soon it will be all central banks, are looking at this question. Should we be issuing a digital currency? And if we should, how do we do that? I'll say a few more words in a minute. Stable coins are privately issued coins, digital coins, that are backed by fiat currencies or other assets or a basket of fiat currencies in order to provide some stability. And there are reasons why stable coins exist, and they are growing. And then the third category, let's just call it cryptocurrencies. I call it other, but it's basically programmatic money, which is in digital format. And the best known version of that, of course, is Bitcoin, but we have Ether and Ripple and lots of others, literally thousands of digital cryptocurrencies in the market. So when we think about the regulatory response to cryptocurrencies, we've actually spent some time studying it and understanding what is happening in other markets. The immediate challenge that we and other markets are looking at is how do you manage the risk of anti-money laundering, the AML risk, and allow a holder of a cryptocurrency, a holder of Bitcoin, who sells it for a profit or at a loss, it doesn't matter, to take the proceeds of that sale and deposit them in the domestic bank account. So if I have a bank account at a local Israeli bank and I own Bitcoin and I sell it for, by the way, I don't own any cryptocurrency, but maybe I should, I don't know. But if I sell it at a profit and I want to deposit the proceeds in an Israeli bank account, will I be able to do so? And so banks will only feel comfortable allowing the consumer to make that deposit if there is no anti-money laundering risk, or at least the risk is at a level that they can tolerate. Our regulatory response to this conundrum is that we allow and require the banks to manage their own AML risk. This is something led by the Supervision of Banks, which is also at the Bank of Israel. Having said that, we're also aware of the FATF recommendation to legislate the travel rule, which says that the transaction message should identify the originator as well as the beneficiary of the funds, and that will significantly decrease the risk of anti-money laundering because we will be in a better position, the system will be in a better position to identify the source of funds. We do have legislation that will require that, and so we expect that when it becomes effective, it'll be easier to manage the AML risk and easier to accept such funds. Longer term challenges, which perhaps are more interesting from a strategic perspective, are what kind of commercial framework should we apply to cryptocurrencies? If a crypto exchange wants to be active in the local market, what rules should apply? And what rules should apply to stable coins? Will they become systemic means of payment, and how will they impact financial stability? It's a big question because stable coins, if they're big enough and dominant enough, could actually compete with the local fiat currency if they're not backed by the shekel. So another question that we're looking at. And then another major category that I'm going to the fourth bullet point now, that is a question we look at is, okay, in Israel, which is known as the startup nation, now we have so many unicorns, especially in fintech, that we're beginning to call ourselves the scale-up nation, where we have so many companies active in crypto and blockchain, and yet almost all their activity is done abroad, in Europe, in the US, in the Far East, and elsewhere, but not locally. Should we be thinking about steps that will enable them to be active locally? And it's a question whether it's a role for the central bank, not necessarily, but if we look at the regulatory landscape collectively, we do have interagency discussions. We even have a committee that looks at digital assets, which I head, that asks this question and thinks about, what can we do to enable these players to be more active locally from a regulatory perspective. So that's about cryptocurrencies and stablecoins. Issuing a digital currency as a central bank, CBDCs, the digital shekel. Should we? Well, I think one thing that's become clear is that most central banks around the world are thinking about this. We've spent a few years researching it, and now we've moved into a little bit of a more proactive mode, saying, okay, we think we've done enough research and we have begun, or we maybe understand this. If we decide to proceed, what would our plan look like? What would it look like from a technology perspective, from a legal perspective, from a payments perspective, and more? But as we go about this process, we continuously ask ourselves, as do most central banks, I think all central banks that are looking at this, do we need a digital currency, a central bank digital currency? And if so, why? So here are some lists on the screen, some items on the screen to adapt ourselves to the future digital economy, provide things like delivery versus payment and programmable money, perhaps a better infrastructure for cross-border payments. Some of you may have seen the BIS last month in July published a paper on the concept that countries thinking about CBDCs would do well, or central banks would do well to also consider using it as a vehicle to improve cross-border payments. Is it a tool for effective monetary policy, either proactive management of monetary policy, or perhaps defensive, to avoid a digital dollarization of an economy where a large stable coin might come to market backed by the dollar or the euro, where the local market seeks to manage its own monetary policy? Can it help reduce the shadow economy in line with our national agenda? Is it important for financial inclusion? It probably is. We think in Israel it's less of an issue because at very high levels of a banked population locally. We know in other markets that's less the case. And there are some other reasons here on the screen. And after we go through all of this, we may well come to the conclusion that we don't need a CBDC, but we'd like to make sure that we're ready. Looking at what's happening in other markets, it's clear that many jurisdictions are taking significant steps forward in this space. We published a draft model of what a digital currency would look like if we were to proceed. It would be retail, not wholesale. We want to provide some privacy protection, certainly for low value transactions. Like if I buy a coffee, you don't necessarily need to identify me. High value transaction, perhaps I should be identified. We'd like to use a two-tier model so consumers would not obtain digital currencies directly from the central bank, but rather through a distribution channel, through banks or narrow banks or other entities. We'd like to provide offline capabilities to make a payment just like you can do with cash. And we currently do not expect to pay interest on accounts that have, or to pay interest on digital currencies. And we published a call for information about this draft model. Deadline was a few days ago. We were very pleased with a large number of responses that we received. And we're now in the process of reviewing those responses and engaging with the players that submitted. And thank you to those of you who have done that. This is a global call. We are stepping up our activity in the payments space. Already have done a lot and look forward to doing a lot more. If there are other central banks or entities anywhere on this call that would like to engage with us, perhaps for a joint research project, perhaps for some joint thinking and brainstorming, please do reach out. And in that context, I have personally entered discussions with OMFIF about setting up a global working group for people in my role in other countries to be able to exchange thoughts and ideas. And so reach out to me or to the OMFIF team if you'd like to be involved with that initiative. Hopefully we'll be able to get that set up. Thank you for your time. If you'd like my email address, it's here on this final screen, or you can look on the Bank of Israel website under the management team and reach me that way.